Welcome back. So on Friday, I detailed that we had a major macro structure shift in the short term, but long term, we're still bullish. So we were in this megaphone pattern as of the middle of February, last week or so. And it could have broken either way. It chose to break down first. And this breakdown that happened on Friday produced a pretty big down day. We were looking for a relief rally today. We did get the relief rally today. I said in the Friday video that if we recovered this zone right here, this is where Friday closed, right over here. I said if we recovered this zone, we should see a rally back above. As you can see on futures open at 6 p.m. exact, we back tested, closed the candle above here, and ran pretty much from above my zone all the way to a high of 67.50. We actually back tested the area as support, so you can see how important this level was. Had another bounce to a new high. Then once we came back down, we ultimately failed the level. And most areas that fail, like currently like right here, we failed it, and then we back tested it during today's session and then sold off. So if you were treating today as like we always do, which we trade the cash market session most of the time, because on Sunday we would rather just spend time with our families and kind of relax for a bit. But if you saw this overnight futures action, you would have mapped it out exactly like I did. Put the pre-market high up at 67.50, the pre-market low at 60.34. You will have seen that we reclaimed our support spot here. That was resistance. We back tested it once. So it's a weak support now. Getting below here is a failure with a first target down by Friday's lows. So on cash market open, we came straight down, took out this low, and then we blew through Friday's low with some conviction here, put in a little reversal, reclaimed Friday's low here, right here, for a good move, about 10 points. So this was my trade of the day. Once Friday's low was reclaimed, it was once back tested, rejected, and then when we came back again, when we got back above here, it's the same concept as over here. It was resistance here, come back a second time. I'm betting on it actually making a move back up to retest the area we broke down from. I took a long from Friday's low to pre-market low. It was an easy 10 points because you know how we trade here. We take our 10 points and then we move on. So I took my 10 points in this area here. As you can see, we did go about another 14 or so points higher, back testing the zone that we held as support in the overnight session, and then eventually sold back off to retest the cash market lows again. This is an absolutely bullish posture going into tomorrow, as weird as that sounds, because we're holding the cash market low here into the close. If they wanted to, they would have closed below it with some conviction. But as always, we don't predict, but we trade the traps. So what I want you to do is come over here and let's put in today's low, which came in at 599.450. So we're going to put Monday's low. We'll put that in a little pinkish purplish color. So we'll put in Monday's low here. Now, why this is important is we always look for areas of liquidity before seeing a significant move back up. So the way I view tomorrow is we have a couple areas to reclaim that will stage a multi-leg rally. And so far, we're betting on Monday's low being either holding here or being taken out and reclaimed. That would make a good trade. Most moves happen after a trap. If we go back and we look, Friday closed around this area, this cluster area here. It was a trap, and it thus opened up and then rallied above it and stayed above it while also failing into the end of the day. This would have been a good trade at the close if you bought the close, or even if you bought the open yesterday, because we reclaimed the prior resistance that now became support here. So if you read and react to how markets actually work, you'll understand now that the bulls need to hold this area here in order to stage a rally back up again. The great part about this is we now know where the bear's stops are. So being long on any traps below here will propel us back up the levels again. We'll take a move back up to Friday's low, which was 60.24, pre-market low, probably up to this resistance shelf again, and then on to 67.50, and probably then on to our trend line up here, which will probably coincide with our trend line up here probably in tomorrow's session. I'm betting on a pretty nice trap and go from today's close. I look at this as a very bullish setup. We are in a level to level market session right now. So my trade I would be looking for tomorrow is either a dip below today's low, reclaim this and make a move back up again. You know me, I only take my 10 points. If I get my 10 points, I'm pretty much done with the day. I think we're in a range now between here. So if I look at this, I'm going to call this our range from pretty much up here, this area, our general area here. Our resistance shelf is still here and it's still a resistance shelf. So I'm going to call this little area right here our range for tomorrow. This area right here. So if we are transversing this range in a multitude of ways, I won't have a lean either way. I think it's a pretty nice, decently sized range. It's about a little over 50 points. So I think if you're trading the liquidity spikes either below or above the range, I don't like to short, so I'd rather you trade the lower end of the range. I would think it'd be very easy for you to get your 10 points for tomorrow. If we get a pro below this level here, the next level down will be somewhere around 59.89 to 59.82. I'll show you why I think that and why I think that will probably happen before we get our next move higher. I like to look at the 4-hour chart and see the last area that put in a nice low before we had our move up. Looks like it's about here at 59.87. I could see that level being taken out tomorrow, being dipped below, reclaiming Monday's low, and then a rocket back upside. That's the way I view markets. If we get below today's low, back test it, and then start making a move lower, we're probably going a lot lower again. I don't see that being a high possibility. Markets love to take elevator downs and then squeeze back up again. Today we got our relief bounce and a move back down again. We're holding the lows here. I don't think that we'll be taking a hard leg down from here, but I will say that just know that short squeezes are always around the corner and people never see them coming. And they usually come in when you're looking at a very bearish posturing market. Anytime you see a big move down, you always get a massive squeeze. You see big move down, squeeze back up to a new high. Big move down, squeeze back up. You just always see big move down, squeeze back up. Big move down, squeeze back up. Huge move down, squeeze back up. The squeeze is arguably just as violent as the big move down. So I think today was a relief bounce into finding a low, and finding a low is a process. So we put in a low at 599.450, and now we can go and back test that low and use that low as liquidity now. A lot of people will probably be shorting that low. I will not be shorting that low. I think you should stay long this market when you see any spikes of a liquidity zone like 599.450. So for tomorrow, the way I would look at the market is we get a spike below 599.450. We get, even if we'd be even better if we could take out this little mini low here. If we take out this low here and then reclaim 599.450, I'll take that move back up to 6,004 and probably even 6,014. But I will say I am a level to level trader, so I will be taking my 10 points off there, but I will leave a runner because it very much well could get all the way back up to 60, 67. And that can happen in tomorrow's session alone, which sounds like a 70, 80 point swing, but it's definitely possible and probably the more likely scenario for tomorrow. So I'll be looking for any dips of today's low and reclaims. As long as today's low holds, we are going to work our way back up again. So we might not even get that pro below that I'm talking about here. But if we're like hunting for setups and we're being a sniper in this market, we're going to be looking for a dip below this level and reclaim. And in tomorrow's session, if you see us still holding above this 6,004 level, the market probably won't take another dip lower. It might actually just hold this support level and then run up again. But I'm going to take things level to level. Tomorrow's action, the most immediate action I'm looking for is a dip below 5994.50. So I'm going to put that in here. So we'll put dip below and reclaim. Possibly to, let's see. Well, hold up. Let's put dip below and dip below reclaim. Well, dip and reclaim. Sorry, not enough characters can be used on the PC, but if you use your phone, you can write as much as you want. As you can see, I wrote here. But I'm looking for a dip below and reclaim. The deeper, the better, because it creates more momentum for a move back up again. We are looking for a massive move back up again to retest the breakdown areas. If we get back up inside this megaphone, we will be taking a hard leg higher, multi-month leg higher. So right now we're still, if you want to zoom out, and I could take away my drawing, my studies, and my drawings here. Let's let's just put a new set here. But if you look at that, we are in very bullish posturing here. So I would stay long on a dip below 5994.50 and reclaim for a moves back up the levels again. Remember, level to level, take your 10 points. Thank you.